Buyback just went wrong with Hasbro's stock, the high-quality toy maker with a stock that had been on an epic run, at least until today, when it got slammed down more than $5 or 6.64% after reporting what I thought was a pretty solid-looking quarter. We've been fans of Hasbro for quite some time because of the company's fabulous licensing deals with Disney, which give them the exclusive right to make toys and action figures for all kinds of incredibly popular franchises, from Star Wars to the Marvel Comics movies to Frozen, the whole Disney princess line. So what did happen here? Well, this morning Hasbro reported a robust 2-cent earnings beat off a 39-cent basis, higher than expected sales up 10% year over year. Looks like a very healthy quarter, but there were some issues underneath the headline numbers that caused some investors to get skittish. Maybe it was the slowdown in Hasbro's larger business of toys aimed at boys, which grew by just 4%, down from high double-digit numbers last year. We got to find out, because I'm wondering if the biggest issue here isn't perhaps that Hasbro simply had run up too much going into the quarter, up 25% year-to-date as of Friday's close. And investors were anticipating a picture-perfect quarter, maybe a decent quarter with a little hair on it. No. Given the scale of today's sell-off, we need to figure out if this is a rare, buyable pullback in a high-quality stock, or maybe there was something we should be more cautious about. So let's check in with Brian Goldner, the chairman and CEO of Hasbro, learn more about the quarter and how his company's doing. Mr. Goldner, welcome back to Mad Money.
Hey, Jim. How you doing?
Oh, good, Brian. I got to go right to it. There were a couple questions on an otherwise fabulous conference call, which you were congratulated on, that caused people to do some selling. And let's just kind of tick them off. Some people felt that inventories were too high. I thought you answered the inventory question, so maybe you can do that to our viewers.
Inventories were up because we're getting ready to launch a third and fourth quarter business on Disney Princess and Frozen. It's been a great business for us thus far this year. It's going to be even bigger in the second half of the year, and that accounts for a lot of the incremental inventories. You have Star Wars. It's continued to sell incredibly well. Our own brands and Nerf are up double digit for the first half of the year, and Play-Doh was up for the first half of the year double digits. So we're just filling demand, and of course, 80% of the incremental inventories were associated with those top few brands of our company. And also the spread of inventory between domestic and international was quite good. 40% incremental inventory to domestic and 60% to international. We're building a bigger global footprint for our brands, including Disney Princess and Frozen, and we need the inventories to back up the sales. Okay, now some people were talking about boys' weakness, and you did have the end of the Jurassic World deal, which conceivably could hurt because you even said on the conference call, yeah, well, that's a meaningful piece of business. Yeah, for the second quarter, Jurassic is a meaningful piece of business versus last year. It was about $50 million a year ago. But our boys' business year-to-date is up 13%. We're seeing tremendous results in Star Wars, but our own Nerf business also up double digits, double-digit POS and takeaway. So for the full year, we're very comfortable that we have lots of new boys' initiatives. Then coming in the fall, Transformers, our Transformers business that's associated with our new television series is performing quite well. And we'd see that for the third and fourth quarter of the year. And so we also have a new brand in Yokai Watch, which is a Japanese brand that we're bringing around the world. And we expect that to add to revenues in our boys segment. So overall, we have a great boys year lined up.
Now, Pokemon Go came up on the call, and this is not necessarily mutually exclusive to what you guys are doing.
Well, in fact, we love mobile gaming. Our mobile gaming business is up 80% first half of 16 versus 15. We see the mobile gaming category as a place that our brands perform incredibly well. We love that people are gaming more than ever. We are looking at and developing AR and VR and other initiatives along those lines as well. It's been in the toy industry for quite some time. So overall, we feel very good about gaming, particularly mobile gaming. Our brands perform particularly well there. In fact, this quarter, we had great results from Yahtzee with Buddies, which is a great social dice game created by Scopely in partnership with Hasbro. And it's been performing quite well.
Do we have to be concerned that Transformers did not had a down year when, even though I know you had told us that that could happen?
You know, Transformers has come off of a movie year a couple years ago. We were still selling lots of movie product in second quarter. I wanted to indicate that for the full year, Transformers has lots of initiatives in the back half of the year. And next June, Paramount's planning to launch Transformers The Last Night, a brand new motion picture that will be out next summer. And then, of course, 2 new films planned for 2018 and 2019. We've continued to build the Transformers brand from being a very small brand back in 2000 to being a multi-$100-million brand, one of our top brands of our company. And we believe we can continue to build Transformers over time. We're executing across the blueprint. In fact, in the second quarter, Another great mobile game for us was Transformers Earth War from our own Backflip Studios in Boulder, Colorado, and it's off to a great start. It's a top 100 game on the App Store, and millions of downloads already, and so we're excited.
Now, you have $422 million in your buyback. The stock, as we mentioned, it's one of our favorites and was up huge in the first half. Is this one where you just say, okay, well, look, if people don't understand that this was a good quarter from us, we do have a buyback. That's why we have a buyback. And several times in the quarter, you talk about, both in your deck and the conference call, you love returning capital to shareholders.
We do. In fact, over the last number of years, we've returned 136% of net revenues, net earnings to shareholders. Our dividend we increased this spring, thanks to our board of directors, by 11%. And we expect to buy back between $100 and $150 million worth of our stock this year.
And to the sellers, you've got a full slate in 2017 of almost all your big franchises in terms of movie tie-ins, right?
We certainly do. We have great movies coming from Marvel, a brand new Spider-Man. We have a Transformers in the fall. We have a My Little Pony movie coming, distributed by Lionsgate, an animated film, our first animated film. And so we're very excited about the lineup for 2017. It's as strong or probably stronger than 2016.
So, I mean, then in other words, I detect from you that you kind of are a little bit like we feel. I mean, the stock had run up so much. I don't know how you could possibly do what people wanted, but it was an extremely strong quarter. I mean, there's no question about it. You beat the numbers handily.
Well, we grew in every category of business. We haven't even talked about our games business. They grew up single digits, high single digits, double-digit takeaway in games. Face-to-face gaming as well as mobile gaming is performing at a very high level. Our girls business was up 30%. Our preschool business was up 5%. You know, we had some headwinds from Jurassic Park, but again, a great quarter in categories, and we grew in every geography around the world. All of our reportable units, North America, Europe, Latin America, Asia Pacific.
Well, I don't know. I mean, I think that sometimes the penalty is having a stock that is so good that you can't possibly equal expectations, but it was a great quarter. I want to thank Brian Goldner. He's Hasbro's chairman, president, and CEO. Good to see you, sir.
All right, good to see you, Jim.
Yeah. All right, sometimes you get a break. You get a stock that's down big on a good quarter. That's Hasbro. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.